So, how do you go from potato farming to $100 million in AUM in just a few years? My next guest today, uh, Levi Allen, is going to explain exactly how he did that. So, Levi, welcome to the show.
Thanks, Jonathan. I'm happy to be here.
So, there were probably some steps in between potato farming and $100 million of AUM. But before we get into the backstory, if you could just give a snapshot of where you are today, just to set the context, I think that would help everybody listening.
Yeah, so I'm just over 700 units, a little over 100 million in assets under management, consisting of 10 properties. Let's see, I think 6 of them have been syndications, 4 of them have been either joint venture or just properties I bought on my own. So that's kind of where I'm at. Yeah.
And where are those properties located?
Utah, mainly Utah, and 2 properties currently in Texas. Just sold one about a year and a half ago.
And what part of Utah?
Salt Lake City, we've got one. Ogden, we've got a couple. Clearfield, we're closing on one in North Salt Lake right now. So yeah, all along the Wasatch Front. Oh, and then St. George, Utah.
So I'm always like really excited when I have a guest on the show who is investing someplace other than Texas. And I know you're in Texas, but it seems like the bulk of your portfolio is not in Texas. Gets a little tiresome, like hearing the same story, over and over and over again. So I'm really interested to hear your story. Why Utah? I mean, you're not even located in Utah personally, although you're not too far away over there in Idaho. At least for us East Coasters, we think those are really close to each other. Maybe you don't, but yeah. So what is it about Utah that you like?
Yeah, there's a lot of things. For one, I've got a lot of family there, so I've always spent a lot of time growing up just kind of knowing the area. And then it's the fastest growing, fastest birth rate state in the country. And then, yeah, so population growth is always like top 3 every year. Employment growth, it's really landlord friendly, business friendly. And then it's landlocked too. So you got the Wasatch Front on one side, a mountain range, and then you've got the Salt Lake and Utah Lake on the other side. So there's somewhat of a limited supply of land as well. So those are the main things that come to the top of my mind. But
I mean, so what kind of deals have you invested in? Tell me the sort of typical thing that you go for.
yeah, it started out just older properties, kind of your value add typical thing in 2017, 2018, 2019. And then starting in 2020, the next like 3 or 4 deals I bought were newish construction. One was, 2 of them are coming out of lease up. Just because at that point of the market, cap rates were about the same, and just on a risk adjusted return basis, it seemed like a better play to just buy newer, nicer, cleaner, better located, and get the same type of yield. And especially since I'm more targeting like 20 to 80 unit properties, that a lot of times you can find mom and pops that they're not getting all the rubs, all the utility bill back. They're not getting like a media package, internet. You can get a bulk contract at $25 to $30 a unit per month, and you can retail it at $99 a month, and just all the other income. And so just trying to find those properties that are mom and pop managed, but quality properties. And then a property that I'm closing on in 2 weeks, it's a 1980s build, value add, owner of 10 years. They've just kept the rents really low. So I'm starting to see more opportunity to get back into the value add space. But yeah, from 2020 to in 2021, I was focused on newer construction. So I don't know if that answers your question, but I played in both, I guess.
Yeah, no, that's interesting because I so many people in this business are focused on value add, and as the market got to be really frothy at the end of the last cycle, the value add deals, they still had people still wanted them, but they didn't really make as much sense. And especially what, like you mentioned, on a risk adjusted basis, it made a lot more sense to buy something that was new. A lot of the more sophisticated sponsor, sort of syndicators who'd been in the business for a while were talking about that very thing or doing that very thing. But I think just to, for the audience's benefit, why is it that those deals would be more attractive to you than a value add deal at that point in the market?
One of the things is CapEx is below the NOI line. So when you're just looking at a cap rate, even if the cap rates are, I mean, the cap rates were basically the same, but even if you were buying at a higher cap rate for a older asset, you're going to have more ongoing capital expenditures. So really your net cash flow isn't as attractive. And if you're holding longer term, which I like to plan on holding a little longer term as well. And if you're not just going to be flipping it soon, you're going to start having some of those repairs come up. So yeah, and then the tenant quality, you're just lower incomes, more delinquency, just less stable tenants in general. So I guess a mix of those.
Yeah, I mean, what people, I've talked with a lot of people about this, not so much on the show, but just sort of in private conversations where, there seems to be a typical progression in multifamily where you start out buying, older properties that need a lot of CapEx because they look really good on paper, right? The cap rates are high.
Yeah.
And that was a long time ago. That was when cap rates were higher, right? But anyway, the idea is that the cap rates look really high to you, but then as you get into just kind of really understand how deals work and what's involved, you start to realize that newer properties, you wind up making the same amount of money, even though the cap rates are compressed because the older properties have so much more, work and just issues that are ongoing. And then when you get into a situation like at the top of the last cycle where there was really no risk premium at all for buying a value add deal,
Yeah.
it really didn't make a lot of sense to buy them. But that's what everybody was buying, right? Because it was sexy, and it underwrote really well, and you could, talk about these rent bumps you were going to get, but in reality, that wasn't really the case.
The story to the investors too, like you're buying in Phoenix at 300 a door for 1970s, but we can go in and spend money and we can bump the rents and it's an easier story to tell to get investors on board than we're buying a property that's already brand new and they don't think there's any meat on the bone. And even though there could be with, operations and, so I think that was part of it too.
So how have you sourced these deals? Have they been through brokers or off market or a combination?
Through brokers. Yeah, almost 100% through brokers.
So how did you break in with the broker community when you went out to Salt Lake and started buying deals there?
Yeah, it was tough. Just spending a lot of time with them and getting to know them. And the first somewhat big deal I did, 124 units for 8 million, was it was in Texas with another lead sponsor. So that one kind of I put that on my resume. And then going back to Utah, the next deal I did, it was about the same size of a deal, about an $8 million deal. And that was a joint venture. So I don't know, I guess it's a mix of just getting to know the brokers, showing them that how to underwrite, how you have connections with management companies, insurance broker, you're showing them your ability to close. You have all these equity connections, whether it's close family or whether it's a partner or what have you. Just trying to, I guess, show them that you have the ability to perform.
And so speaking of equity connections, or where, how have you been able to raise money for these deals?
Yeah, so it just started out with family and friends. And then it's just organically kind of grown to, like in my local community where I grew up, just the higher income earners and then cousins and, dentists, doctors that I know. It's kind of just been organic for me. I haven't made a huge push for online, like starting an online platform, like starting my own podcast or something like that. So for me, it's just mainly been organic, starting out with family and friends. And
But so how have you actually, like, let's just talk through this a bit to like just dig into it a little bit more so that people kind of understand the process. I mean, even if you didn't have like quote unquote a process that you went through, there was something that you did to start meeting people, talking to them, getting them interested.
yeah,
So what was that like? What did you actually do to start raising money? And then, what do you do now to meet new people and kind of get them into your orbit?
yeah. I mean, I don't know that I'm the best person to teach what the right way is to do. I probably haven't gone about it the right way.
Well, I mean, if it
I'm
worked,
pretty,
it was the right way, right? So I mean, there are many different ways to do this. That's why I'm interested,
yeah,
right? Because you
yeah,
can do things online, you can do things in person. I was just on my last podcast I recorded was talking about how I think it's coming back around now to more in person, and
yeah,
less online. But you weren't online doing this in the first place. So I really want to kind of understand, get a better
yeah.
understanding from you
Right.
so what you actually do to meet people and then how you kind of talk to them about
Yeah,
this. What's your approach?
yeah. Um, I guess I have been online a little bit when it comes to just like Facebook and Instagram. Even back in 2018, I was doing a few like webinars and just teaching the basics of apartment investing and sharing about recent deals I was doing. And so, like one of my first big investors, he's a dentist in Hawaii. He grew up in the community where I grew up, so he knows my family. So there's some trust just with like our families knowing each other. We're in the same church, and then he just saw what I was doing and started following me. And so a lot of it was that just people that already knew me or my family and had trust with us, and they saw what I was doing. Um, but yeah, I don't really know. Trying to think back of like, yeah, it's just word getting out that this is what I'm doing and then talking to people about it. But I definitely should have probably taken a more proactive approach of, um, I don't know, being more organized with doing like meetups and like, there's a million ways
Well,
to
I mean, listen,
show credibility.
if it's working, like, don't change it, right? Whatever you're
Right.
doing until you have to change it. So I
Yeah.
don't think there's any need to like beat yourself up for not doing it the right way. Because like I said, whatever you did worked. So, I'm curious, I mean, like, let's just get really basic. Like, are you taking people out for coffee? Are you, meeting them at their house? Is this mostly on the phone? Are you doing Zoom calls? What's your typical way of, uh, and are people coming in through referrals, or are you out there trying to, go to a lot of like events to meet people? How are you doing it and what are you doing?
Yeah, mainly just on the phone, referrals, a lot of family and friends. I'm grateful, I guess, that I have a good family connections with cousins, uncles, aunts, and then that has kind of grown, and then referrals from there. So a lot of it is just trust through my connections, I guess, and then organically, yeah, just getting on the phone, walking them through potential properties that we're pursuing, and
And so people just referring you to their friends, their relatives, that sort of
yeah,
thing after they invest with you. Eh,
yep,
So how did you get started in all this? So you mentioned to me before the call that your background is actually in farming. Um, and so, I mean, I'd love to tell me a little bit about your upbringing and then tell me, sort of how you got into multifamily investing.
yeah. Growing up on a farm and a ranch, you're able to get a good worth ethic and also just kind of learn the basics of running a profit loss with our cattle business and seeing my parents run their farm operation. So I guess that was somewhat helpful. But just from an early age, I was interested in investing. My older brother was as well. So just starting to read books and listen to podcasts. So mainly self-education is the path I went down, but just also having some early mentors. I did take a couple courses, like a Michael Blanc syndication course early on, and then yeah, just like the first partner I had on my first big syndication, and I kind of learned some from him. So yeah, I don't know if that answers your question.
Yeah. Well, I mean, so what spurred your interest? You said your brother was interested in investing, but how did you, and I know you bought like the first deal you did, you told me was like 8 units that you bought. Like, how did you actually get started? Where did, just kind of walk me through that.
Yeah, so I think back then, like how my underwriting was to now, it was so just cut and dry, just back a napkin. Um, but yeah, I mean, back in 2017, you could do that. If you I had the courage, like, okay, I think this is a good deal. It's a 8 cap on actuals. We can get it to about a 10 to 11 cap, and our debt is at I think it was 5.5%. It was seller financing, 75% of the purchase price. And so yeah, I don't know. I'm trying to remember what the question even was. Just
No, just,
how I
how,
spurred my
yeah, how did you get
interest.
started? Yeah, I mean, like how did you, I mean, first of all, how did you think you wanted to do this? And then, how did you find the deal? And I believe you said you used your own money in that deal, but
Yeah.
still, I mean, so you didn't have the headache of raising money, but you still had to find the deal and figure out whether it was a good deal or not, and it sounds like you arranged seller financing, which is also, that's a kind of a sophisticated thing to do. So how did you do all this on your first deal?
I guess I would just say I relied a lot on other people. So like the real estate broker that helped me on that 8 unit property, it was a couple that was retiring, so they wanted to do the seller financing. So they actually proposed it, not I didn't even propose it. And so I relied on them a lot for that. My brother at the time, he was a little more sophisticated on the numbers and stuff, so I kind of relied on him. Um, I don't know. I mean, it was just I sold my cattle to my brothers in 2017, and that gave me enough cash to do that first deal then. So part of it was just timing too. Like a lot of people talk about wait and do nothing smaller than a 20 unit or start with a duplex. Like it just happened to be I had looked at a handful of deals, but I wouldn't say hundreds. I'd looked at a handful of deals, and this one happened to pop up in my local small town, and it was cheap, and it seemed like the numbers made sense. It would cash flow positive, so I kind of just relied on the connections I had, and I went for it. And
Did you put some capital into that deal, or did you just run it as it
a little,
was?
not very much, like 4,000 a unit maybe, or something, on not even on all the units.
And
So the market just kept going up. I mean, I bought it for 350,000. I put 90,000 down, sold it for 700,000 4 years later. And yeah, it cash flowed like, well, I refinanced it too, like 2 years into it, and pulled out all of my money and some. And then the second deal, similar thing. I had some land that I sold in 2018, 1031 exchanged into a 10 unit in Utah for 812,000. I put 260,000 down was my exchange proceeds, and then I put another 80,000 into the property, and I sold it for 1.8 million. So it was like a 3.5x on my equity over 3.5 years. But the Utah market at that time was just going nuts too. So I felt like I found a pretty good deal at the time, but a lot of it too was just I was just going off the best I could do, and I committed and I went for it, and I was blessed that it was able to work out good.
and so, I mean, you had the wind at your back, which is always great. But in terms of like the operation, did the operations wind up kind of uh, coming out the way that you thought they would? Like when you compared how it actually worked out to how you underwrote it, like what was the
On the
comparison
early
there?
ones, I didn't really know what to expect on the early ones. So I guess it kind of happened how I thought. But as I got into larger properties and got better professional third-party property management and started better understanding the revenue and expenses and how to optimize it best and management efficiencies. I started to realize that I wasn't really underwriting stuff as accurately as I could. But on the first few deals, I didn't really, you don't know what you don't know until, so you're just going off, what other people tell you, and you're to your best knowledge of how to underwrite it.
I mean, I think the way that you, whether this was planned or not, I think you went at it really the right way. And people are always coming to me and asking me, like, should I start with a big deal? Everyone tells me I should start with a big deal. And the problem is, unless you're like born really rich, you're not going to do a big deal with your own money. You've got to have investor
Yeah.
money in there. And, why would you want to start like your very first deal being responsible for other people's money? It seems like
Yeah.
make a lot more sense. And what I have started really advising people to do is buy the biggest deal you can buy on your own, or maybe with a couple of partners, where you guys are, it's just your own money and you're not bringing in third party money. Do that a couple of times. Not only can you build up a little wealth for yourself, but also you learn on your own dime, right? And
Yeah.
then you can go out and tell other people like, hey, I've done it before. I know
Yeah.
where the landmines are, and I have some experience, and it's just a lot easier to raise money that way. And also you feel a lot more confident in yourself, because you don't feel like an imposter because you actually do know something about what you're doing.
Yeah.
At least you know what mistakes you made, which is a big thing to know.
Right. Yeah, I tend to agree with that.
And so how did you then get into syndication?
So I guess it was just a buzzword that I started to hear about back in 2018. So like I think I mentioned to you before, the Michael Blanc, he had a program pretty early on. I went through that. There was a few people kind of teaching about it that I just started studying. Grant Cardone, even like back in 2016, I started following him, just kind of what he was saying. And there wasn't really one thing. I didn't like join one mentorship program that set me free. It was kind of a mix of a lot of connections and people that I was following and learning from, that
And
I
like,
kind of self-taught. And
what was the first deal you syndicated?
so it was 124 units in San Antonio, Texas. So
And
in 2019 we bought.
and how did you get into that deal, or how did you find it?
I actually came across it. I started calling brokers. I was targeting kind of the junior brokers because they have less of a buyer's list built up, and they're usually more inclined to work with someone that's a little newer. And I had looked through a handful of deals with him, and then this one came across. I had approached the sponsor that had 1,000 units at the time in San Antonio, and we looked through a couple deals, and this one we ended up doing. So I put down the 80,000 of earnest money. I helped raise part of the money, and I was involved a little bit in the deal to get a little bit of the GP, and he raised most of the money, and he ran the deal. But
And then what was next after that? So you got your, I mean, it seems like we kind of like filled in a bit of the
yeah.
backstory here. So you did that deal in Texas, and then you had this on your resume, and you were able to go to Utah. So what was kind of like your, was that kind of like your idea? Like you wanted to invest in Utah all along, or was it more opportunistic?
I would say I more so wanted to invest in Utah, but I picked a handful of other markets that I was also kind of dabbling in, because Utah was just so hard to break into. I couldn't get traction with any somewhat reasonable deal that looked attractive. But in San Antonio, the market, it's a little bit slow and steady type market, and I had more traction early on. But so I knew Utah better, and I knew I wanted to be there if I could do deals. So I actually did another syndication deal with that same sponsor in San Antonio, and then after that, in 2020, I did a deal in Utah, and then I did another deal, and then 4 more after that, all in Utah. But
And when you started getting into the Utah market, and you were doing syndications on your own, So like, how was it to raise capital at that point? Had you kind of started already the process of building an investor list, or were you like scrambling to find had a deal and now like the mad rush is on to try to find investors?
Yeah, I had started building my list, but as you know, being in the business, you always get people that say they're interested. And if you don't stay in touch with them and keep them warm, the chances of them pulling the trigger when you have a deal is pretty low. So I just learned pretty early on, like you got to really um, get people hot and heavy, I guess, for lack of a better word, to stay interested and be serious when it comes time to for a deal to come up.
And did you have help raising the capital on that, or were you able to do that on your own?
So the next deal in Utah was a 3.3 million equity raise. I did that one myself, but it was a JV, so I just had a few high net worth guys. The one after that was 1.9 million. It was like 12 investors. So I've mainly been the sole GP for all. The one I'm closing on right now, I brought on a co-GP, but I'm still raising the bulk of the equity. So I think a lot of it too is just getting my confidence up that I can do this, and whether you think you can or you think you can't, you're right. So you just got to get that confidence up and move forward.
And when you're actually doing those capital raises, how are you, getting the word out to your investors? Is it like email? Are you pounding the phones? What's your a little of both? What's your methodology?
A little bit of both. Usually an email first, just telling the high levels of the deal, and then get on it if they're interested. We're texting. Sometimes I'll send texts as well, and then if they're interested, get on the phone and talk more. And I guess if I'm scrambling like I have on a couple deals, then you're starting to call people. But usually I'm not doing that unless we're really needing some more funds.
And in terms of management, how are you managing these deals?
Yeah, I use a third-party property management company, Cornerstone Residential. They manage 25,000 units nationally. In Utah, I think 15,000 or so. But I started pretty early on with them, and they've treated me good. I've actually, one of the owners of the company has actually invested in some of my projects as well, and been a KP on a couple of the deals. And so I've just built a good relationship with them, and they've been really good to work with. So I feel like you got to get a pretty big portfolio to even make sense of managing yourself if you want to go that route.
Yeah, I mean, I remember when I first started, I thought like, oh, I'm going to do self-management. And I was quickly talked out of it. I thought, okay, how can I manage property if I don't know how to do the management myself? And then I was quickly talked out of it by someone who was kind of a mentor to me, who'd actually worked for a company that had tried to start their own management company. And they had like 2,000 units. And it turned out to be a disaster when they tried to bring the management in house. So he was like, look, you don't want to do self-management until you really get big. So
yeah.
So what kind of advice would you give to a new investor starting out? Somebody who is wants to break into the business, really doesn't know what the first step that they should take is. What would you, looking back on your own experience, what would you advise them to do?
Yeah, I kind of agree with what you were saying. I think just go with as big as you're comfortable with, but don't feel like you need to go do a 100-unit deal. I used to always say, like, you can, if you can raise some equity, you can partner with an experienced sponsor and raise some equity for them and be involved a little bit to get in on a deal early on. But really, you might not even really know how to, if it's a good deal and whether you want to put those people in that deal to begin with. So I almost agree with just try to study as much as you can, learn as much as you can. And at some point, you can't just keep, doing analysis paralysis. You got to find the best deal you can and go for it. Ideally, yeah, with your own money or maybe a couple family members, and you're going to learn a lot doing that. And then you can kind of know from there, do you want to buy bigger deals and raise capital, or where do you want to go from there?
And what do you wish you knew then that you know now? Like, what's the most, I don't know, the biggest thing you wish that you knew?
I guess without assuming you know like what is going to happen with pricing and rents and stuff, because you would just try to buy up everything you could if you could go back. But um, I guess just relationships, just focusing on the broker relationships, the management company that I'm with. They 5 regional managers are investing in the deal that I'm closing on right now, and 2 of the owners, because I just have trust with them and they know it's a good deal. And broker one of the top real estate brokers, he's investing in this deal. So I guess just focusing on the relationships that you feel like are most important, and um, that's all I got. I can't think of
And
what else.
what and like looking back, like what do you think is like the biggest mistake you've made?
Um, Probably just not being too scared or shy to reach out to people, to reach out to, because usually people are happy to talk to you. I was just talking to a developer in Utah that has 1,700 units. He's worth a couple $100 million. Um, he's in the process of trying to sell one of his deals, and he's happy to talk to me. It's just early on, I was too scared to even try to contact someone like that. And you just got to get over that. Everyone is a human, they're, most people aren't going to act like they're better than you. They're happy to talk to you. So just getting over that fear to make more connections.
And what do you think has been your biggest success or the thing that you're proudest of in your real estate career so far?
I guess I feel like I have a eye um for a good investment, just being able to spot opportunity and look at things a little bit differently, maybe contrarily, like when everyone's buying value add, I'm looking for newer, nicer stuff, and just kind of, yeah, trying just finding opportunity where other people aren't always looking.
Well, so on that note, if people want to join your investor list or just get in touch with you, maybe talk with you about how you did it, what would be the best way for them to get in touch?
You can go to the website, wealthcreationmgt.com, or send me an email, levi@wealthcreationmgt.com, or find me on Facebook or Instagram, Levi Allen. I'm happy to talk to anyone.
All right. Well, thank you for that. I highly encourage everyone to go talk to Levi and definitely go to his website, sign up to become one of his investors. And just would like to thank you for your time today, Levi. It's been a pleasure to get to know you a bit.
Likewise, Jonathan, I really appreciate it.